So if you're someone who actively trades in and out multiple times each day, odds are you're a scalper and you want a scalping strategy. Well, in this video, we're going to go over just how you can use a very simple scalping strategy that just encompasses one indicator and price action. So really quick before we begin, you're going to want to know what an uptrend is and a downtrend is and how to define it. I've already gone over this in previous videos, but I'm just going to recap it because it is very important for this strategy. So an uptrend will be defined as making higher highs and higher lows. As you can see right here, we have higher lows, higher highs, right, in comparison to the previous high, in comparison to the previous low, higher low, higher high. And then a downtrend is defined by lower lows, lower highs, lower lows, lower highs. So now that you know that, let's actually get into this strategy. So for this strategy, you're going to want to use the RSI indicator. Now, if you don't already have it set it up, it is going to be the default settings, 14 as the input, and the source will be close. And then other than that, we just have good old price action. So this strategy is going to be very, very simple. When we're in an uptrend, we're going to look for RSI to go oversold like this, and then in a downtrend, we're going to look for RSI to go overbought like this. Now, the way we use RSI is a little bit different than most people. So if you aren't already aware of how to use RSI, we use it like this. Okay, every time the RSI line, which is this blue line here, goes below the 30 level right here, okay, that's considered oversold. But we don't actually take any trades until RSI comes back out from below 30. So let me just zoom in here. So you can clearly see we have RSI going below the 30 line right here. Clearly you can see that's 30. We don't actually consider it a decent area to trade until RSI comes back out. See, now we come back out of the RSI oversold area, and then it's the same story for overbought. So as you can see, we have a 7, so the RSI 70 line right here. Anything above 70 is considered overbought, but we don't actually consider taking any trades until RSI comes back out from that 70 line. So when we get below 70, that is when we start considering to even look at RSI. So in this strategy, all we're going to be doing is waiting for RSI to go oversold in an uptrend and wait for RSI to go overbought in a downtrend. So let's get into some examples. So let's look at this example right here. Let me just make RSI a little bit bigger so you can see. So you can clearly see that we have made a higher high right here, right? We have a previous high right here, and then we have a higher high right here. Okay, so this is an indication of a possible uptrend. So what are we going to be doing? Well, we're going to wait for RSI, right? We have this new high here. Well, now all we're going to do is look at RSI and wait for RSI to go and test that 30 line. Okay, so when does that actually happen? Well, it happens right here. Okay, so let's zoom in on this area here. All right, we would have waited this entire time, right, just for this spot right here. And now this is the Euro US dollar 15-minute chart. So this is trading on a 15-minute chart. So let's zoom into the price action here. So we get very close to 30. Anything below 31, I consider oversold, right? So we get just below 31 there. So I consider that close enough. Okay, and now once that happens, once RSI is oversold, we now want to look at price action. Okay, so we only want to get in. This is a scalping strategy, so we want to get in the most accurate spots possible because our stop loss is going to be relatively tight, and so we don't want to put too much risk on the table by risking an early entry. So we only want to get in when price action confirms what RSI is telling us. So RSI went oversold here, and then you can see we rallied out of being oversold, followed by a green candle. Now here's the second part of this strategy, is you want to get in on an engulfing candle. Okay, so if you don't know what an engulfing candle is, a bullish engulfing candle just means that the green candle is much larger than the previous red candle, And then a bearish engulfing candle is the exact opposite of that. It is the red candle is much bigger than the previous green candle. So you can see right here, this is a bearish engulfing candle right here because it engulfs the previous green candle, right? It's much bigger than the previous green candle. So we want to get in on this scenario. In this scenario, we want to get in on a bullish engulfing candle. So bullish means that it indicates price wants to go up. So a bullish engulfing candle just means a green candle that is much bigger than the previous red candle. So where do we see that here? Well, this is going to be our entry. So RSI is already telling us that it is overbought or oversold, sorry. So that's our first confirmation here. Now let's look for that bullish engulfing candle. So right here is not an engulfing candle because it's not bigger than the previous red candle. Here is not a bullish engulfing candle because it's not bigger than the previous green candle. Wait. Yeah. Here is not a bullish engulfing candle because it is not bigger than this red candle here. Now what do we see right here? We finally get a bullish engulfing candle, okay? Because you can clearly see this big green candle here is much bigger than this red candle right here. So this is a bullish engulfing candle. It engulfs the previous candle right there. So now this would be our entry point. And now what we would do is literally just get long or buy using a market order, okay, or a limit order, whatever you prefer, but we want to buy at the close of this candle right here. Okay, so let's get our buy position on there. And you can already see what happens, but we want to buy right at the close of that candle right there. And our stop loss, we just want to put it right below that candle. Okay, just a little bit below the candle. All right, just sort of eyeball below the candle. You just want it on a safe spot below structure if you can, right? So this is a low. You want to put it below the low. Okay, so now here's the scalping part of it. Okay, you want to trail your stop loss. All right, so let's forget about the target right here. Let's just forget about the target. You want to trail your stop loss being this red line here, as more engulfing candles form. So since we're buying this, we're looking for bullish engulfing candles. So where do we see more bullish engulfing candles? Well, here's a pretty bullish engulfing candle. It's not necessarily an engulfing candle in the sense that the previous candle is red because the previous candle is green, but it's still a massive green candle. So what do? Well, we just move our stop. We move our stop loss below this green candle here. So that immediately mitigates our risk, okay? And now all we do is keep trailing on big green candles. So we're going to move our stop loss from this green candle up until the next big green candle, below the next big green candle. So we're going to move our stop loss here. All right. So now our stop loss, let me put a line there, 1 second. Okay, so I've made it a little bit simpler by making this black line here is going to represent our entry point, and this red line right here, if that is red, yes, that is red, maybe I'm colorblind. So this is going to be our stop loss, right? So this strategy actually does not have any take profit level. We want to try to extract as many pips as possible within the quick movements of the market, and that's why it's a scalping strategy. So we're just going to move this stop loss, right? Once this big green candle forms, okay, let's just do this, pretend it's real time. We now move our stop loss below this green candle low. Okay, now we're just going to keep looking for the next green candle, or next big green candle, right? It can't be these tiny green candles here. It needs to be a solid green candle like that. So we're just going to take our stop loss now and move it below that green candle. So now we've locked in, if I can get that to work right, hold on. We've locked in about 10 pips of profit here. Okay, so now we're just going to wait for the next big green candle, which is pretty much right there. I don't think anyone would disagree with that. We're going to move our stop loss right below that low once again, and we literally will just keep doing this until the market takes us out. So there's a big green candle right there. We're going to trail our stop loss below that. Here's a big green candle right here. See, this one it's relatively big, but it has a very large wick, so it's not that strong, right? Lots of sellers here. But this one, it closed very strong. It's a nice big body, and you can clearly see lots of buying pressure in that candle. So we're just going to keep on going. And I would say that we're in so much profit right now that I would probably say once you see this red candle here, might as well lock in the rest of the profit into this. It's not a huge candle, but it's a decent size, decent strength candle. So okay, we're gonna keep going up. Another big green candle there, so we can use that as our stop, as our trailing stop. And there's another big green candle there, so we're just gonna move it up, and we should get stopped out here more than likely, unless we get another big green candle. Let's see. Oh, okay, another big green candle. I actually was not expecting all of this. All right, so there you go, stopped out right there. But as you can see, our entry point was over here. All right, so let me measure this out. Our initial stop loss, one second. Come on. Come on. Come on. So our initial stop loss was below this low right here. So it was about like a 10 pip stop loss. And by the time we exited out at 104 pips. Now obviously this is a really, really good example. And I don't think you're going to be getting 10 to 1 risk to reward every single trade, but you get the idea that you're just trading the price action and the RSI within the trend. Okay, so we had an uptrend. Now let me just clarify one important rule for this, is that we don't want, if we're trading this, okay, so this is an uptrend right here, we have the new high. So our new swing is from this low to this high. Now, if this low were to break, well, guess what? That's no longer an uptrend, right? That's now becoming a downtrend. So if price were to come from this high and break the low right here, all right, which it didn't, it got down to here. But if it were to break that low right there, then it would have been, you wouldn't want to look at the RSI anymore. You wouldn't want to look to buy. You would want to look at the RSI to short. So let's see if we can get a short example here. Alright, so here we have another example. It's going to be a short example. So now you can clearly see we're in a downtrend for the most part, but more importantly, we have to define what a downtrend is, and that is lower lows and lower highs. So you can clearly see we have a high right here, then we make a lower low compared to this low right here. We make a lower high compared to this high right here, and then we make a lower low compared to this low right here. So now we have a main swing. Our swing is going to be from this high to this low. We're waiting for RSI to go overbought, all right, which happens right here. So now we have RSI overbought right on this candle here. We wait for it to come back down first. It came back down on this candle right here. Now we just need to look for that big red candle or engulfing candle. Honestly, you can just use a big red candle or a big green candle. It doesn't always have to be exactly an engulfing candle. I just use the word engulfing because that's what people are familiar with. But let's just go and see here. So there would be our entry right there. A nice big red candle, clearly bigger than any other candles here. Its body is bigger than any of these other candles here, except for this one, but that's pretty far away. So our entry, we're going to go short right here. Our stop loss is going to be right above either this candle high or the high in total. Depends on how much risk you want to take. Let's just say we'll put our stop loss right in between, right above the high and just below this high right here. So we're going to make that black so that is our entry, and here's our stop loss. Now we're just going to trail on any big red candles. So we're going to move our stop loss right there. No, that's not really big enough. We have a decently sized, so there's an engulfing candle right there, so we'll trail right there. We have a big bullish engulfing candle there, so that's not a good sign, but let's keep going. I'm going to say let's move it down just below this red candle here, just because we have bullish signs, so you want to always keep track of, price action. Okay, and there you go. So could have trailed it either down here or you could have left it up there. Either way, this would have been a profitable trade. So our risk was, starting off, we had just about 25 pips of risk, and then from our entry to where we get stopped out, about 30 pips of profit. So your profit is always going to vary because it just depends on how far the market will actually go. But that's what makes it a scalping strategy. You're just going to try to get as much profit as possible by trying to ride the trend and just take as little risk as possible for the most amount of gain. So that's going to wrap up this video. If you enjoyed, you can subscribe, turn on the bell notification, and please give it a like. That's what helps the YouTube algorithm. So if you like the channel and you want to see more content, just give it a like, and that'll boost my self-esteem and confidence in posting. Alright, so I'm going to be posting about 3 times a week. So if you like it, subscribe, bell notification, and like the video. So I hope this strategy works out for you. Go and test it. Do everything at your own risk, and have a good one.